Mindset Reset traders, it's Thursday. Thursday is day 2, and that's the topic of today's Mindset Reset. We had major red news in the Europe window. We had German PMI, French PMI, I believe. We had British PMI at 430, and we had unemployment numbers 8:30 New York time, and we had flash services PMI 9:45 a.m. in the US window. So it's day 2. Now, I cannot emphasize this enough to traders. Monday, Tuesday, Wednesday, day 1, day 2, day 3. Wednesday resets and becomes a new day 1. And Thursday is day 2, heading into Free Cash Friday, day 3. Now, there are going to be different weeks, different templates, week 1, week 2, week 3. We're going to have different weeks where there's no major red news on a Thursday, or there's major red news on a Wednesday that changes the template. We had FOMC yesterday, the minutes, and that actually was a catalyst for a very explosive reversal on the indexes. And I want to come back to understanding the high and the low. I talk about this in the videos. Traders are trading inside of previous day and previous week's ranges. And Dalton, market profile. If you are inside, whether you've broken daily levels, if you are inside, you are still inside of a previous range of buying and selling. So traders, one of the things I want to address today is the mentality of how a trader approaches the markets with setups. So we had first green day on Japanese yen, first red day Canadian dollar that started in Asia, blew off in Europe, London, and gave a short squeeze parabolic at the end of the London window heading into the US session. Japanese yen went parabolic and was in breakout just prior to 9:45 a.m. and I made a comment on the community post DNC, meaning that we're in a market that's in breakout, so potentially now on a range expansion, not to counter trend, meaning that the news traders, because they're up high, think I'm going to sell this because there's a news catalyst and it's going to go all the way back down to the low of the week. But we're in a market that's in breakout on day 2, higher highs. So brings me to my next point. I've received a few messages and comments about, wasn't this supposed to do that, and shouldn't this do that? And I don't know how to answer that. One of the things I need to encourage traders to do is not have an expectation, but to be executing a setup. So if you're trading gold, or you're looking to trade gold, but you don't have the runs on the board, you don't have the experience, you're not sure what the setups are, you're still kind of like, I don't get it, Stacey, this just doesn't make sense. Sometimes I get it, then it doesn't make sense. Then, as I repeat over and over again, study gold, don't trade it. And also study it on Wednesdays and Fridays if there is indeed a day 3 setup, either for a parabolic trend trade or a reversal opportunity. Dump and pump, pump and dump. Which brings me to a next point, is that an excellent question from a trader was, how can understanding that if Monday's the opening range and Tuesday we can expect or look to potentially see a range expansion, how can that be of any help to us? So an excellent question. As I come back to just a simple understanding that if this is where the market is going to originate its movement from at the open on Monday morning or Sunday night North American time, and then from that point at auctions, different instruments will auction maybe all in one direction. It might auction on both sides of that original closing price of Friday, even if there's a gap. Part of the markets, obviously, there's going to be global commerce involved. There's going to be other factors that will drive why that price should shift, fundamental reasons, or just in general, the fact that the market will establish a range that it can now set buying and selling areas from to begin the game of either trapping traders on the wrong side, using the news as a catalyst for explosive breakouts, those sorts of scenarios. So how can that be of service to you? Well, if you're trading in Asia, London, or New York, there's no major red news, or there is major red news, and you have a day 2 on the front side, And the market potentially is now going to go on a range expansion, whether it's after a news catalyst, whether it's heading into a session, a 3-session setup. It could be US, Asia, London. It could be Asia, London, New York. It could be London, New York, Asia, whatever that may be. But if they're going to expand the range on day 2, we could have a parabolic trend trade in line with the original range expansion direction. So for example, if the market has broken a level on Monday of the closing range of the week, that can be an indication of where that market may be expanding to and the type of setup and template that I'd be hunting for on an instrument in the session that I'm trading. So we come day 1, day 2, day 3. Yesterday we had several inside days. And in the playbook, we have inside day opportunity setups. We can have false break reversals. We can have trend trades in a market that is coiled day 1, day 2, coiled sideways day 3. We might get a range expansion indication early in a session. So some traders are looking to counter trend constantly on the inside day. We get a range expansion as we saw on, I believe, the Japanese yen. It made a higher high and a dump for the pump coming out of the London session. So coming back to that point about understanding that we can get a range expansion. So here's the thing. If the market, there's 2 scenarios, pump and dump, dump and pump. We can get a market that's setting up into that template. So if a market is going to break down on the backside and it's day 2. So one of the questions I got regarding gold was, wasn't it supposed to be a dump and pump parabolic? I re-emphasize to you, if you're going to trade gold and trade on a day 2 and the news, I don't have an expectation. I just need to have a setup. It broke out of Wednesday's high, creeping trend down, breaking down, major red news. It had broken lower through closing price. It pumped back up. Several traders rode that down towards the low of the day. It hasn't broken that level at last check, but it could close as a first red day now on the backside. EuroCAD. We had Europe news that spiked the low. They broke the low first. Wednesday was an inside day. They went vertical to the high of the day. So now we've got the inside bar traders triggered short, hit the stops, breaks back down inside the low of day level from Wednesday, and pumps back up first hour inside of the peak formation high. Now, some questions about this pair. As I've talked about before, when there's major red news in the U.S. session on potential large movers, sometimes the non-US dollar crosses are worth looking at if there are setups there, because they may not react the same to the US major red news. So we've pumped back up into the peak formation. The first move to the high is a stop hunt into Tuesday's high of the week. Remember, range expansion now. Opening range, initial balance. We may have the high and low of the week in place. Day 3 is an inside day. They manipulate both sides of that prior to the US window. Session 1, session 2, session 3, lower lows. Pump it back up for a dump heading into the 9:45 a.m. news release. Easy 25 or 30 pips, I believe. Great trade. Some questions about that. Some traders were trying to sell it down low. After the 9:45 release, you're selling down low now instead of selling the pump. So understand the type of setup that you're looking for. You're looking to sell a parabolic move after major red news in a market that is already broken down with no pump. The news should act as either a pump, as we talked about the 4 types of news releases. So we can get a vertical candle, a 1-minute candle, 1, 2, 3 to the high. We saw this last week on gold. 1, 2, 3 to the high. It breaks down, pin hammer. That's a 5-minute candle now for the continuation in a move that's already collapsing down. If you're selling down at the low of the day after major red news, of course the market can pump back up. That is not the setup. Pump and dump, dump and pump. So I think that traders, just to talk about that, second hour, if you sold that at 9 a.m. at the high of the day level, EuroCAD, there's 5 minutes for you to be in that trade, to lock in profits and be out of that trade prior to the 9:45 a.m. release. The 8:30 news release is over. There's an entry at 9 a.m. You have 45 minutes to lock in profits and step aside and let whatever Flash Services is going to do it its thing, and either just not look at anything else, shut it down. It's day 2. So we've had all this major red news. Markets have already moved, and tomorrow's Free Cash Friday. So I will say this again. The most common day for traders to get chopped up on is a day 2. So if you had issues today, I know several traders just said, I'm not even going to bother, because there had already been movement. A couple of the trades that I did take were nail and bales. So oil heading into the end of the first hour, we had a little consolidation in a market that had broken down. So we made higher high and a lower low on into the peak formation high of the week. So we know there's third hour crude oil inventories. Taking that dump down into Tuesday's closing price level is an understanding for people. I know that is a nail and bill, because that market, if it's going to rifle down and reverse all the way down to the low of the day, we had high of the day traders triggered at the beginning of the day and into London. So it's either going to collapse down to the low of the day, or it's going to work into the low and reverse into the end of that second hour, which is what it did. And then I made the comment, 11 a.m. news. So think 9 to 10, 10 to 11, that's 1 hour, 2 hour, 11 a.m. news release, a third hour trade opportunity. It just went parabolic on the news release itself. If you chase the first minute, it probably came back, I think, a little bit into that first minute trader. So there was a reversal opportunity on oil. You have to think in terms of, like Mark Douglas says, probabilities / possibilities. There is no, I thought it was supposed to. It's how is price behaving? Once I'm in the trade, how is it behaving? How much time is evolving? What should this market be doing? Has it hit my target? Should I be closing the rest of this trade down? Is there potential that it could continue to go? Whatever that may be. What time is it? How is price behaving? Am I out of the trade already? Has it already hit my profit target, or is it already reversing against my position? So there is no supposed to. Nothing is supposed to happen. There are only probabilities / possibilities. So on a day 2, for traders that are one question again from a trader was, can you walk us through the setups on all the different pairs? Not every pair has to have a setup. That's the whole point of having a basket, is I'm just trying to find the best ones in this session. That's all it is. And I know that tomorrow's day 3. I know that we've already had movement in several instruments. All I'm looking for now, knowing that there's 9:45 a.m. major red news, there's 11 a.m. crude oil inventories, is an opportunity in my window for easy free cash. Now I saw the index is going parabolic, so I want you to think about this just now in closing. Day 2 going parabolic is often a setup. Parabolic, chasing away, running away on day 2 is often a setup for the reversal, a parabolic reversal on day 3. Now, again, I'm going to put some emphasis around that. That is a common template. Wednesday's day 1, Tuesday runs away, takes out the high of the week. We could see a reversal opportunity on Free Cash Friday. We may not. It may not even set up. It may coil and just trade in a range. Who knows? But when it's running away like that, that means the New York session now, and if 9:45 a.m. is the real open of the session, the 9:30 put in a low of the session before breaking out on parabolic at 9:45 a.m. Those traders are now up high. So it'll all depend on how the market, it could coil on top of that range and continue on day 3, or just chop sideways, whatever. But we're up high in the New York session. And as one trader commented, so for example, the NASDAQ to me was the weakest of the 3 indexes. It had coiled sideways. There was a gap. I thought it had the potential. It put on the news, put a peak formation high, in which is a range extension. So now I wanted to see it pump up and break down for a parabolic collapse, maybe back to the high of the day level or even through the low of the day level, which was a 50 pip box. So it didn't do that, left it alone. And a trader commented, but is it a trend trade or a reversal trade? Now go back and look at that chart. You're inside of the previous week's range. And this is why I want to emphasize understanding that when you're inside of previous selling and buying levels, there are other time frame traders on both sides of that until for the DJ30 broke through the high of the week, high of the month, I think, and then pulled back. But you're inside of levels. The high of day, you're inside of a range already that's where buyers and sellers are. So when I said inside day at the beginning of the week, Monday, Tuesday, Wednesday, you're inside of previous selling and buying levels. We got a parabolic reversal on FOMC, and in the playbook, I talk about second day trades after major high impact releases such as FOMC. Can't remember the specific page number, but it is in the playbook. So traders in Asia, some higher highs, right? Higher highs, range extension, dump and pump templates to continue that move on day two. So no expectations, just executions. That's the most important thing to think about. And if you're trading non-US dollar crosses and there's major red news in the US session and there's a perfect setup there, I'll hit the trade. So again, if I'm in the money or the trade isn't moving, we're heading into major red news, I'll close out that trade. So it's day two, day one, day two, day three. I do not want people to be mixing and mashing all these other things up and then asking me questions. The day count does not change. There are different templates between Monday and Friday. But Monday's day one, Wednesday's day three. It resets to day one, Thursday's day two, and Friday's day three. The most common day to get chopped up on is a day two. Remember that. So tomorrow's Free Cash Friday. Hopefully we'll have some opportunities. Last couple of days, definitely challenging for a few traders. There's nothing wrong with that. And the best, most powerful thing sometimes is to step aside and just observe and learn. If the market's given perfect, we've had perfect playbook setups, Asia, London. And that's often what we may see, right, prior to Free Cash Friday. But think about this in closing. Third session on day three, closing range of the week. I want to look for the best opportunity for either a reversal or a trend trade closing out the week. The third session is going to close out the week on a best trade setup candidate. Have a great day, traders. Get to the gym, get some sunshine, enjoy your day. Tomorrow's Free Cash Friday, and may the markets go with you.